Hey traders, Raghee here, and in this recap video, I want to dive into something. This chart might look like a mess, and for the most part, it was. Really, for the entirety of the day. This is a 5-minute chart of the S&P, and it's a popular chart for two things for me. One, it's often the chart that I will use as a visual anchor to organization and trend. So if I'm going to day trade, intraday trade, active trade, it'll be based on the kind of clarity and organization that I see on this chart. And then, of course, it's a good candidate for kind of more conservative, slower moving, higher risk reward intraday trades too. So this was a conversation that we had in the chat room, and the question was there a trade in a very choppy day? Was there a brief opportunity for a trade? And there was, and I want to show you what it looks like, because I think knowing when not to do something and knowing when you do have an edge makes a big difference. This wasn't a big trade, but it was probably the best risk reward that we saw throughout the day that had organization. And if this market decided to do something it has often done, which is kind of rally past 1:30 Eastern into, or rally past 11:30 Eastern into 1:30, have those mid-afternoon rallies, this would have been a great setup that could have taken us there. Instead, it ended up being about a 3-point risk for about a 4 to 6 point reward. And I want to walk you through just some of the main points of it. Number one, there was a few warnings that we had, not as ideal an uptrend. And those warnings would cause us to enter with a little deeper a pullback, meaning I'm not going to play something at a 13 or 21 EMA, preferably a 34. And then using the propulsion dots, and we have a system of green and 5 or red and 5, this was by 11:05, 11:10, a valid buy. So we know what environment we want to place the pullback buy within, and this one met the criteria. And then we use the hourly price movement range, which was going to be at this point in time, and time does dictate what that follow-through range would be, about 3.5 to 4 points. So this was really a textbook intraday pullback buy, and quite frankly, some aggressive traders could have bought any pullback into the wave as long as the candles were predominantly green. So green, 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 pullback buy, or green, 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 pullback buy. The reason this one was so much more textbook is because the 5 propulsion dots we had in here. So you don't have to take buys like this, but they're valid. But when you see something like this, when you got propulsion dots and the green, even though we had that blue there, that triggered after the 5th dot. So you really knew that afterwards. So you would have been willing to do something at the 21 or 34 EMA around 11:10 regardless. And again, nice follow through after that. Those are the kind of trades that I wait for. Those are the kind of trades that I think are higher percentage winners. And the real gem to this, and I'll talk about this in the premium video, because minus this particular key, if you don't know what the upside targets are, if you don't know to look at the time of day and coordinate the targets according to that, you could overstay your welcome. And I'll talk about how not to overstay your welcome in the premium video, not only on our recent gold winner, but also on this S&P 500. And we'll also talk about some of the other longer term trades we have, whether those be yen buys, watching for some energies, opportunities, and also what I am waiting for in order to perhaps get into silver. All right, see you in the next update.